Ladies and gentlemen of the crypto space, we're live at 11:28 a.m. on a Friday, March 26th, the end of the week. We had a heck of a week. We had some serious volatility. It's not just in the crypto space, it's in the equities markets. That's because the legacy financial system is basically vaporware. There's so much technical data suggesting there's never been a logical reason for a financial recovery. The system, the mo- the monetary system is a manifestation of actual human behavior, and the human behavior is basically decimated since the pandemic started. It's been crumbling. So the divergence between the economic boom and what's occurring in the economy, with regard to employment and consumer spending, it's just all distorted. Which basically means you should have no damn trust at all. Don't trust shit. They'll take your money and they'll go up and then they'll just sell it all. There should be no trust. And if you approach value allocation with no trust, you're going to be in a better position to grow value. Because if you grow value in a risk considerate fashion and you get an, oh, dare we say 20, 30, 40% on your money, one, you're outperforming real inflation, 15% give or take a year, dollar debasement. And two, you're going to avoid the risks of losing value. The goal is risk adjusted returns. That's the only thing I'll ever recommend in my stream. Is in the whole title of this stream is buy targets higher than the current spot price. I'm not going to buy a dip. The value just went down. I don't want to buy something that just went down in value. That it went down in value because there was fear in the market. And people sold and liquidated because they didn't think it was going to go up. So I'm going to buy something that just went down. If I could get 40% of the money by waiting for it to go up versus 100% of the money on a buy the dip that it may still keep going down, I'm going to take the 40%. I want less returns. I'm just saying. Today's episode is sponsored by a Change Angel, the non-custodial swap exchange for social goods. Stop depositing on exchanges, not your keys, not your crypto, non-custodial DeFi, or nothing at all. Bam, let's pop it over to the main screen and see who's in the stream. Got Mr. Weeby in the house, always a pleasure. John McGuire, RR, yes, 13 people, 3 likes. We can do better. What I got up on the screen is Yarn, 18.79% on dollars. Wells Fargo, eat that. There's some serious strategies going on. What I really like about Yearn.fi, obviously you got Yearn.finance as well, but they give you at least a textual description of the contract strategies, which is something that I wish I had for Alpha. I wouldn't mind knowing, but even if I knew the dollar strategy they had for 3 curve, this is quite descriptive, and this is a relatively risk considerate approach. If you notice, it's all farming and uh, compounding of the farming yield. So idle comp are obviously reinvested, which is compounded. And then you also have Alpha Homoro. The Alpha gives you yield on USDC, and there's compounding there. And DYDX on the third, the strategic generic Lev compound farm. So, with regard to contracts and risk, the more sophisticated a contract, the more risk. So that's why many contracts over the last year have gotten into technical complexity and had security issues. But when you're talking about custody, there's almost a de-risk state with regard to custody. A contract can hold assets; those assets are controlled by your private keys. Great. That's let's get past that one. 2, yield farming, where custodied assets, USDC in this instance, are allocated a particular quantity of value. Yield farming is basically de-risked, in my opinion, as well. The technical complexities that have arisen, resulted in some security issues, are when it gets more sophisticated than that. And basically, these particular strategies on the USDC vault are trivial compared to the more complex strategies. It's basically just compounding. It takes your assets and puts them in the idle comp positions. Never had a compound issue. We never had an idle issue. I mean, literally, it's Iron Bank had an issue and a variety of other contracts without getting too off topic. But those are lending and borrowing and subject to flash loans. These are custody and value allocation based on percent ownership, or that's the way the farming or the incentivized value deposit um, feedback loop or tokenomics works. And that's three of them, producing 18.5% give or take on your dollars. Now, come on, come on. Does anything get better than that? So I'm contemplating what to do with the capital I have allocated that's risk off. So clearly I have much risk on. Maybe I'll just spend some time going over the rationale for my current portfolio structure, but I have the capital that's risk off and I'm contemplating what to do with it. So folks are like, buy the dip, buy the dip. What do I buy? What am I going to do? Where do I allocate value? One, I'm earning 4.86% currently on the capital. Two, I could earn 18 and change percent. Three, I could go for YLA, which will earn 30 and change percent, plus incentives, plus sushi incentives, plus CVP incentives. It's probably totaling around 50, 60% on dollars. But I already have that position. So you don't put all eggs in one basket. So the question is, what do I do with the cash? And that's what really everyone's thinking about it. Now, the interesting thing is it doesn't matter if you have $2,000 in cash, you have $500 in cash. What do you do with it? How do you grow it? How do you not lose it? Now, obviously, there's different sentiment and feeling when you have more of the cash. Maybe you're more risk adverse, like I am, with a larger position. Now, there's people out there running around with 5 million in liquid capital. What do you do with it? People run around with 50 million in liquid capital. What do you do with it? This is the conversation that we all need to have. Whether you have $500 in free capital, 350, 5 million, or 50 million, you want to grow it. You don't want to lose it. Um, Carlos, all in on YLA. Well, okay, so it's a relatively sophisticated contract. I would argue not incredibly risky because it's based on basically urine vaults, which are relatively de-risked, and curve vaults, which have billions of dollars in custody at this point. So I can't argue from a contract risk perspective. The only argument that could be contemplated is a yield perspective. But shit, 30% aggregate yield on YLA from derived from curve monetary policy, more or less, and the incentives associated with it. Sushi yield, another 12, 14%, however long that onsen opportunity lasts. But then you also have CVP incentives that are coming, and the boost that they're executing. Man, so I've optimized all my software. I have sidetracking. I got push bullet that handles cell phone messages, and I have uh, uh, Google Fi. So telephone calls come through the computer. All my notifications come through the computer. So no matter what happens, I'm literally bombarded on my computer by three calendars, three different emails, and messages and phone calls. It's hard to stay in focus sometimes. It's hard to stay organized. I literally need like an assistant, a full time assistant at this point. I can only imagine it'll get worse over time. Anyway, so YLA is a large part of my portfolio. Um, Suffice it to say. Anyway, Trevor, peace. 19 people in the stream, 11 likes. We can do better. So, 18%. What else do I think about with regard to allocating capital? Sure, I think about risk on positions. This is a perfect example of why this is incredibly risky buying volatile assets. Uni broke down, pushed down through the 200 EMA in the 4 hour, bounced back up. Great, great. You could have bought at 25 and change, and you could have sold if you're quick on the trigger at 28, $4, $3 a piece. If you sold, if you didn't sell, you didn't realize any gains. And look at this. This is so bearish. Smacked right into the 200 EMA as resistance. That's support, flip resistance. We're below trend support. We're below 200 EMA support and is behaving as resistance. No bueno. Gonzo says, do you ever keep your liquidity in inactive pools? For example, RenDGB, now that staking rewards have ended. No. If you hold RenDGB, you're exposed to Digibyte price. And right now, Digibyte price is a volatile asset. There's no way to have Digibyte without having dollar stability. Dollar stability requires a stablecoin pairing. And for those types of pools to be functional, there needs to be velocity, transactional velocity. You need to have yield. And that way, the pool will do what it does, and it adjusts according to the bonding curve. If the pool is not adjusting according to the bonding curve, there's no velocity through the pool. You're not going to have the stabilizing effect of the pairing. I mean, obviously, even if you pair Digibyte against Ethereum, that becomes your denominator, paired versus Ethereum. So Ethereum will be stabilizing the pool, but the problem is Ethereum is a volatile asset unto itself, which is why if you want to be dollar protective, you need to pair a volatile asset with a stablecoin. That's just the way it works. So frankly, I have no incentive and no interest to participate in a RenDGB Ethereum pairing. And I would also be hesitant to, or I would not participate in a RenDGB USDC pairing unless there was, you know, $10 million of liquidity in the pool and $1, $2, $3, $4, $5 million of transaction volume per day. It is what it is. Now, what drives the monetary velocity? What does RenDGB need? It needs a means of accessing equity. It needs basically Aave integration. Yeah, fine, cream, but why are you going to go for something that's cream? You know, functional protocol, but it's I can't stand the food names. I can't stand them, man. Pancake swap. What a fucking ridiculous. Well, it's just ridiculous. It really is. I don't care if it goes 10x on the money. I don't care at all. It's just like that for me. It's done. Done. There's no seriousness. It's all a game to them, and I don't care if it goes 10x. I'll say it again. Let's keep it going. Hey Noah, thanks for WCrest. Do I need more? Well, I don't speak to persons needing or buying or selling anything. Um, I have had a position for WCrest for a long time now. I have 100 WCrest, which I bought for like $200, 300, maybe $400. So it's already gone like 8, 9, 10x on the money. That's pretty cool. I have no intention of touching it. I'm so far in the green, it could go down. I don't care. Um, no reason. It could potentially be the largest non-bank bank in the world. What Robert Sherrod's doing is could draw in trillions of dollars worth of capital. Fascinating. Trillions, not hundreds of billions. You know, if they have 300 trillion dollars of capital, which is out there, and in the family offices for the mega families, not not Buffett that has whatever a couple $100 billion, but the mega families that cumulatively literally have trillions of dollars of assets. Maybe not dollars, but I would imagine there's many trillions of dollars available in the banking system, you're earning negative yield, or in the bond markets and the debt system earning negative yield, that could all of a sudden earn positive yield, even if WCrest is throwing around 3%. Insured, that's what changes everything. And, those types of persons with capital like that are not interested in any risk. They want zero risk, literally zero. They want to be so risk free, it's insured that no matter what, it goes up. That's the way such money operates. So they don't want 5% on Aave, 10% on Aave, or 18% on Yearn. They don't want that kind of risk. Now, obviously, we could take that kind of risk. We're nowhere near that level. Unless you got a couple $100 billion in the bank. I'm just saying, if anyone's on my stream with a couple $100 billion, say hi. I wouldn't mind a high five. My man, we need an Ave while Avo. Oh man, don't, you don't. Woo! Oh, that'd be crazy. I mean, it's dollars. It's basically dollars, and yeah, um, that's obvious, and that would be ridiculous. Considering the macro state of the dollar, you tuned into any non-dollar peg cryptos. Yeah, those are cool. Not into it right now. Not really interested. I mean, literally, the macro state of the dollar. The dollar could lose another 90% of its value. The problem is it's still the dollar. So if you have dollars, every schmuck around the world is like, all right, pay me. What do you accept? Dollars. So everyone still accept dollars. I don't really care about the value of the dollar. Well, I don't know. I don't care about what I care about is outperforming the debasement of the value of the dollar. The only way to think about the dollar is that it's a means of payment. A means value exchange is grossly accepted in dollar denominated form. Um, Clearly, the dollar is no longer money. It doesn't meet the definition of value storage or that part of the definition of what money is. It's just overly debased, so it doesn't store value, but it's accepted everywhere as a means of payment. So great, as long as you're outperforming debasement, you're good to go. That's just the bottom line. 24 people in the stream, 14 likes. We can do better. So we have our 18% on USDC. You could get 30% give or take on your Lazy Ape with 12 and change percent. Was it 12, 14% right now on sushi? Let's load it up. It'll take a second. Go to onsen. So that's a nice little bonus for the short term. Maybe it'll last another month or two. And we're going to get some CVP boost. So there's some more percentage. So this is 14.82% on basically dollars. Look at the pool weighting. It's dollars. It's awesome. Um, but the other thing, leverage, alpha, alpha V1. Well, let's go. We'll go through both because you can get pure dollars. But if you want more yield, these are the places to get more yield. V2. No, here's the alpha pools. No, those are the alpha pools for IBF. I don't want IBF, but if you go over to V2, earn farm pools on V1. So if you go to alpha pools on V2, is it alpha pools? Earn? Yeah, it's earn. So these are basically they alpha lends to themselves. So they collect their dollars, and that's how they achieve their leverage. But here's 30% on DAI, but it's 5% APY on the principal and 25% incentivized yield denominated in alpha. 2% on USDC. So these are not very lucrative. And what you really need is auto compounding. Albeit as alphas could potentially, if you want that kind of risk and that kind of asymmetric appreciation, I'm quite bullish on alpha. So obviously that's your risk tolerance. In a pool like this, you're not going to lose dollars, but your yield is going to be in a volatile asset predominantly. If you want different types of leverage or potential yield on dollars, I wish that we were able to extract value much like the ZAPs on Power Index. You're able to extract value in for an Ethereum USDC pool denominated in Ethereum plus USDC or convert it all to Ethereum. But I rather extract it all in dollars. Then you can operate in these pools in terms of dollars. But look at these. The yield is pretty cool. Um, You get a so I would never do 2.5x. You know, plenty of people love that risky shit. But at 1.5x, you're getting 75% yield. So you could literally just put in dollars if you want, and just you don't even have to put in any Ethereum. So you could come here and it'll automatically split the pool, which gives you exposure to the asymmetric appreciation of Ethereum. And then you could extract and resell for Ethereum as desired. I mean, that's some serious yield. Bear in mind that spot yield and that fluctuates over time. But it is auto compounding, so it is APY, not APR. And to have exposure to this type of position, you're really going to want to understand Ethereum and what it's doing. So we have the large symmetrical triangle on the phone, honey bunny. I'll see you in a little bit, okay? Okay, mommy give you Bobo, honey. Go, my love. So Ethereum is in the large symmetric triangle formation, but it is below the 100 SMA and below the long-term moving averages on the 4-hour. 100 SMA, 50 SMA, 200 EMA. So I'm not bullish on the market at the moment. For me, I have to restrain myself. I wait until like a 1908. You need a break to the higher high. You need a retest, and that's the way you go. And that's exactly what the title of the stream is: buy targets higher than current spot price. Someone asked me, "What's my buy target on Uni USDT?" My buy target on Uni is not now. It's not lower. I'm not a BTFD. I'm not a buy the failed dip kind of guy. I would never buy it right now. That's potentially a big mistake. Below the 200 EMA on the 4-hour, below trend support. So I mentioned to someone that my buy target was around 35 and change. No, baby girl, come on. Be right back. 1 second, guys. Life of a parent. So my buy target is 35 and change, and that's a very contrarian ideology, and that's how you take less risk. Now, interestingly, I've discussed it in many a times. When you buy so there's the risk here. There's risk for depreciation in an Ethereum USDC position, but bear in mind you're going to have diminished depreciation as compared to holding Ethereum unto itself. And the focus and the purpose of such a position is the yield. That's nothing to sneeze about, boys and girls. We're over there on Yearn looking at 18 and change. Over on Aave looking at 4, 5, 6, 10% on average. But we're at 75% here. And we're at YLA at 30%. It's a very different value allocation mentality to focus on percentages rather than dollar denomination. They buy at $20, it goes to 40, you make 100%. Folks, folks see value allocation too much as buying something and selling something. It's not. It's value transfer. You're not buying anything. You still have folks operate their lives denominated in dollars. Value isn't dollars. Value goes across dollars. How about this? Here's an interesting way to think about it. When you buy dollars, you're allocating value to dollars. That's fascinating, isn't it? Today's a day of interruptions, everyone. Go, mommy. Mommy, give you Bobo, baby. Be right back, guys. All right. That's the way days go. All right, let me go back to the stream. Let's see what everyone is talking about. Um, Considering the macro state, I hit that. PGMT is backed by gold. It's okay, gold, but gold is there's quite the many arguments to suggest gold goes down in value. I don't want a gold-backed uh, asset or a gold-pegged asset. Hey, Noah, BUSD USDC pool on DEM exchange gives you 92%. Yeah, but it's BUSD. Yeah. And what the heck is DEM exchange? I have no idea, but it's interesting. I don't. I rather have 40% and feel more comfortable in the position. I don't really want BUSD anyway. There's something about Binance that just skeeves the crap out of me. FTX, that's the way to go. And I think they're much more credible, much more palatable, and something is just more entertainable about FTX as compared to Binance, which just gives a very cringy feel. Always has. Um, let's keep it going. ALUSD three curve is not bad, but it's not auto compounding. Yeah, that's actually a really good point. I think don't you get ALUSD three curve directly in the Alchemy portal? I did see that. That's interesting. Okay, yeah, but not auto compounding APR is not a bad thing because curve is extremely valuable. Curve is potentially quite the asymmetrically appreciating asset. So there's quite the logic and reason to think to want to accumulate CRV. Heck, CRV is an interest-bearing asset because you can lock CRV for VECRV and get potentially an incredible revenue stream in the future. I've shown you guys my VECRV position, which I bought a long time ago for 90% cheaper than it currently is. Did you guys see that Binance Smart Chain curve fork? Yeah, that's cool. I saw the VE curve airdrop. Great. I have no BNB. I can't do shit on Binance. I still can't figure out how to get any BNB other than literally buying with dollars. And I have no interest in buying with dollars. I have my capital in the crypto space, on Ethereum and Bitcoin, and there's no cross-chain functionality that allows me to turn Ethereum into BNB. So fuck it, I can't do anything with BSC even if I wanted to. And I just don't trust getting my capital out because I have no legal access to the Binance bridge. It's basically useless for U.S. citizens. It's completely useless. I have held silver with Perth Mint in the past in their unallocated vaults. My rationale is that you could go wrong with holding. Well, I got gold and silver, physical gold, physical silver. I have gold miners and gold streamers and silver miners and silver streamers, Brendan. So, got hedge your shit. Yeah. Well, silver has the potential for a massive short squeeze. Physical is completely distorted and manipulated, and there isn't enough physical silver and gold to fulfill contract obligations. So the paper is completely not representative of actual physical supply, which is basically exactly what occurred with GameStop and so on and so forth, the short squeeze. So there's quite a many persons on social media talking about silver short squeeze. I don't actively manage those accounts, but I have my positions. Ellipse, it's called. Yes, Mr. Weeby. Yes, it is. Yeah, so Mr. Weeby, all right, fine. When Thor comes out with their chain and they get their main net, and sure, there's going to be cross chain functionality. There's a lot of cross chain coming, boys and girls. You got Ren that was partnered with FTX, and then that's basically interop and cross chain functionality. You got Thor, which will catch up and offer its services. You got Flare, which is coming, and you don't really need. It's not really cross chain, but you're able to collateralize with almost got to be a lot of assets onto the platform. So I'm quite interested in Flare. I don't know why they went. I guess they tapped into the XRP community for their irrational exuberance. But Flare has nothing to do whatsoever with XRP. I've mentioned that a couple of times on social media. Um, That was just some social media commentary and their launch part, one of their launch chains. So Flare taps into chains. They draw consensus from the consensus achieved by chains, kind of like a merged mining type of way to think about it. If you're an old school UTXO person, which is basically what Syscoin does. Syscoin merge mines with Bitcoin. If you're mining Bitcoin, you could simultaneously mine Syscoin. And so if you're contributing hashes to Litecoin, and you're able to also contribute consensus to Flare, and that's basically the type of consensus infrastructure and implementation that Flare is building. That's what they're building nothing related to a particular chain, but they're going to be able to access equity, or persons are going to be able to collateralize F assets and transfer value into the Flare network, and Flare has smart contract functionality. So, ipso facto, Flare has a lot of potential, just like the other L1s. Flare is, you know, there's no best. Stop thinking about best. Oh, I have the best asset. No, it doesn't matter. There's pros and cons to everything, and there's better, and there's worse, it's, uh, and that's reflected in price. But it's not always reflected in price, because there's plenty of assets out there that have a very exorbitant price, but no monetary velocity whatsoever. I'm quite intrigued, and I really look forward to Cardano smart contracts and Cardano DeFi, but its price is so high, and there's zero smart contracts, so that's all speculative purchasing. So it's kind of like thinking about, old school equities and saying there's no fundamentals. There is no fundamentals. There's a lot of development and a lot of money flowing around, and you could talk about all the projects that are going to be released and going to be built, which is cool, and I like it a lot. But going to is different than now, today, and I only allocate value based on today, right now. Um, if an asset is going up, I'll buy it, which is contrarian in many regards. Most people are like, oh, I'm going to wait for it to go down in price and buy it. No, that's not what I do. I want an asset going up. And then I want Confluence suggesting it's going to keep going up. How about that shit? Veronica, no, DEM is a deck exchange that works all three layers. It's decentralized like Serum. Cool. I don't know either one of those. Can I go to 1inch and get it? Because 1inch is a DEX aggregator, and they basically have um, integration with 15 sources of liquidity at this point. And if I could type in Ethereum on the top and BNB on the bottom, I'll get my BNB. BNB. Yeah, there's nothing. So this is synthetics. You could short BNB or long BNB, but I don't have a capacity to actually get BNB. Um, this is a DEX aggregator that has so much liquidity, access to billions and billions of dollars of liquidity of the top liquidity providers, the top AMMs. So this is what I use. I don't like to step out of my comfort zone when I'm dealing with the money that I'm dealing with. I need to be comfortable, and I recommend that for you all as well. You need to find your comfort zone. And if you're playing with things that are new, there's inherent risk in new. And while you might be comfortable with that risk, but you need to understand it, accept it, and know that you're actually taking it. Because if you don't know that you're taking it, people quickly take things from you, and that's no fun. Um, just joined your stream. Do you still hold Rook? Do you think Keeper DAO? Keeper DAO is a ridiculous project. Love it. I use it. I use the limit orders. It's a no-brainer. Do I hold Rook? Rook has no monetary velocity. It's a decaying inflationary asset that has no incentivized supply disruption or deflationary pressures on it. Um, no, I do not hold it. I might. Let's take a look at the chart. Jesus Christ. No, this is not something you hold, boys and girls. Let's go up to the daily. Let's see what it's like on the daily. I mean, look, this was a horrible sloping head and shoulders. I mean, you can't buy an asset like this. My entire participation from an asset holder standpoint was on the other side of the trend, and it was all going up. That was very different, and we were in you guys, if you remember my charting, look at that support. Look at that support. And this is where we were buying, and then it ripped a couple 100%. And my entry was down here pretty much. That support was crazy. One, two, three. It was a triple bottom. That was that triple bottom, if you recall. And then you had the falling wedges, and then you had the breakout, and it just kept going. Irrational exuberance ensued. But then you had complete deflationary cycle. Oh, that was were fun. This was fun. See, this is why you have to follow the technicals, because this was very bullish back then. That's a very bullish triple bottom with this is the 200 SMA, and it pretty much held the 200 SMA, the 200 EMA, and the 100 SMA, and then it broke out. But the second look, it failed below the 50 SMA, the 100 SMA, and it ultimately failed below the 200 SMA and the 200 EMA. This was interesting. This is interesting right here. So on the depreciation side of things, it did hold as support on the previous support line. But when that failed, that's bearish. Then it got bearish. And then look, previous support flipped resistance. Oh, no, 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 no. No, no, no. So to buy this, I would have to see it get above the 200 SMA, the 200 EMA, and flip previous support, flip resistance back into support, and then the higher high. Sure, then you're getting into bullish territory. And then you have risk minimization to take a position. So you see how you can't own everything you want to own. Sure, I think MakerDAO, KeeperDAO is brilliant tech, and I want to participate in the platform and see it succeed. Buying Rook has nothing to do with it succeeding. Buying Rook is an asset that's currently not tied to the project's functionality other than indirectly, well, indirectly, in that it's created during the arbitrage process, and it's used to tokenize MEV value. Great, lovely, awesome. That's a heck of a mechanic that's extraordinary and disruptive in countless regards. I've talked about it to a great extent. But with regard to the price of the asset, it's a decaying inflationary, which means that the only thing that's going to support the price is speculative buying. There's no deflationary component or incentivized supply disruption, which also drives up price. So if you just have speculation alone, you got max risk territory. And note the bearishness on the chart. Anyway, so that's a good answer to what the deal is. Technicals mean everything. It's not connected to Binance, no. It's just trading pair and exchange. Since you said there's no stability, coin with a high APR, BUSD, USDC. Yeah, 92% is pretty cool. I won't own BUSD though. It's not of interest to me. 12:06 p.m. All right, so we went over. You got to wait. You got to buy when asset prices go up, which is contrarian to what most people think. Most people say Bitcoin's at 53,000. I'm going to wait for it to go to 43 and then buy. No, you're not. You're not going to buy it when it's 43. What you want to buy is a breakout and then a confirmation that the breakout is going to go higher. And that's what I will always advocate. You got me on that one, guys? I advocate waiting for prices to go higher before you buy. I don't buy failed dips. No, hold a dip. Definitely hold a dip. But I sell on the way down and I buy on the way up. Contrarian. Grass-fed beef. Fuck the world. That's right, P. There's nothing like grass-fed. Oh man, there's some serious bison steaks that I bought over the years. Grass-fed makes all the difference. It's not beef, but it's just, and also just so lean. Anyway, will Gov try to strangle DeFi using tax evasion as the reason? No, they'll try and tax people. And token tax and a variety of other platforms will facilitate paying said taxes. Taxes need to be paid as much as it sucks and as much as it's really violation, personal violation, in my opinion. I don't think it's reasonable in any regard. I'd rather see very high sales tax, but that might not be encouraging enough for economic growth. Anyway, taxation is complicated and the policies are complicated. But no, because I think the banks are going to want access to this yield. so they could actually offer non-pathetic yield to their depositors. And albeit the banks kind of they have a monopoly that people for some reason think they have to deposit their dollars to a bank, and frankly, the vast majority of society doesn't know any better. So I think it's going to take a long time for things to change. Status quo takes ages for things to change. What about Neo 3 mainnet launch? I believe Neo is one of the best altcoins during the last bull run. Sure. I don't give much thought at all to Neo. Hey, Noah, I struggled to get my head around pairing with USDC to hedge against risk in liquidity pools. Would you not get the same results just providing half the amount to a double volatile pair? No, because the double volatile pair both appreciate and depreciate at different rates. So clearly, you get the balancing effect of the pool. That basically the double volatile pair, your protection is the asset that depreciates the least. So that's the kicker about pairing with a stablecoin. Half the pool doesn't depreciate at all or appreciate at all. So it produces a very interesting effect that results in something called impermanent loss, which nobody talks about impermanent loss to the downside, because impermanent loss to the downside is impermanent gains. You're losing less than if you just held the volatile asset unto itself, risk on. So Ethereum goes down 20%, but if you have Ethereum USDC, your pool position is probably going to go down about 7, 8%. Dollar denominated. You see what I'm saying? That's the way it works. P, grass fed. Yeah, gorgeous stuff. Yeah, lean. I don't eat much carbs. In fact, that's the vast majority of my diet is basically carb free. I'll non-dairy. I don't drink dairy milk. Um, but no refined carbs, no pastas, no chips, none of that garbage. I avoid milk products, yogurts, and cheeses, and vegetables. There's plenty of carbs in vegetables, but obviously, so mostly like a paleo diet, I think is what I push for. Don't get me wrong, I had a Firehouse sub the other day. It was really good, but man, that stuff's not healthy at all. That's another story. This is not a dietary channel. This is a financial channel, my friend. 36 people in the stream, 19 likes. We can do better. Friday, 12:11 p.m., March 26th. I hope everyone has a wonderful weekend. Play it smart. Take less risk. Wait for the price to go up. Buy the breakout. Wait for the retest. Wait for the higher high. And this way you have bullish confluence suggesting the rising price is going to keep rising. Not that the dipping price is going to somehow turn around and start going up and you caught the bottom. You bought the bottom. No one buys the bottom. No one sells the top. Shoot for 40% gains instead of 100% gains. Minimize your risk and you'll produce better, more consistent results over time. Very welcome, Brendan. Stay. Thanks, Noah. Makes sense. Heirloom, always a pleasure. I wish everyone a wonderful weekend. I will see you on Monday. Peace.